Hello and welcome to BloombergQuint. My guest today is Mr. Ajay Piramal, Chairman of the Piramal Group. Mr. Piramal, thank you very much for joining us on BloombergQuint. Your board today cleared a fundraising of 5,400 crores. Can you take us through the details of it?
So we are going to raise 5,400 crores of equity, part of which is through a compulsorily convertible debenture, which CDPQ will subscribe to, and that is 1,750 crores. And the balance, 3,650 crores, is by way of a rights issue to existing shareholders. So what is important in this for us to appreciate is that CDPQ is already an existing investor with us. In September 2017, when we had done our QIP, they had come in with a $175 million commitment. Again, at that time when we'd done our QIP, we had raised the whole amount in the similar manner as a compulsorily convertible debenture, which converts at the end of 18 months into equity. And this time as well, we are doing that as well. In addition, we are doing a rights issue where the promoters are fully committed to ensure that the rights issue is a success and will be fully subscribed to. So overall, we'll get 5,400 crores, part of which the compulsory convertible amount from CDPQ will come in December this year, and the rights issue the process should be done by February next year.
What is the kind of dilution on a fully diluted basis?
So actually there won't be much dilution because all the rights issues will be subscribed by existing shareholders. I think the dilution will be about 5%.
And that too because of CDPQ basically.
Correct. But the CDPQ is also an existing investor, so they'll come in there as well. And
you already have a good capital adequacy ratio of 20% odd at the end of Q2. How is the capital adequacy looking once the money comes in?
So actually, this will become our debt equity will come down to about 1.7 times. So it will be we'll be very well capitalized and will be able to take advantage of all the opportunities for growth that are there in the environment.
And how are you going to use the proceeds from this?
So what we will do is that we want to now make our book much more diversified. So one of the big areas that we will invest in would be to see that how we can get into consumer and retail lending more. That's one. Second, I think that we will want to look at funding like a senior secured debt for many of our existing people also who need last mile funding. We want to do that. In the financial services space, I also think that there are many opportunities which are available today to do inorganic growth. So we would look at that as well. In addition, our pharma business is also doing well and it is well positioned to take advantage of the opportunities. If you look at the pharma business today, in the last 6 months, we've grown by 19% on the top line, the global pharma. We have an EBITDA margin of 24%. Even in the last 8 years, we've had a CAGR growth of 16% there. So there are opportunities in our model to do into the global, whether it is in specialty, complex generic products, or it is in providing products and services to global pharma.
In the past few years, we've seen your focus more on financial services. Now you're talking about how pharma is growing and how opportunities are there. As a group, you're also trying to de-risk and diversify the businesses as well. Is this?
So it's, our focus has been there all throughout in both.
But
otherwise we wouldn't have had
let me put it this way.
The emphasis is more because market people want to know more about financial services. So that's why it is. And even now today, most of the questions will be on financial services. Therefore, I said that we should also talk about pharma. Which is in a way at a time when you see so much of turbulence, it's the steady sector and which in some ways diversifies the risk to the company as well.
we spoke about it maybe 2 or 3 quarters back, and you were saying that you're seeing stability, some bit of stability coming in, but in the NBFC space. But then over the period of last 3-4 quarters, we have seen deterioration of asset qualities within the NBFC space, consolidation happening. Did you? Was it a surprise to you the way the pace at which it was happening?
I think the pace has been more rapid than what one would have thought, and I think that if the ministry and the other players, the regulators, were to look at it, if we take some more steps, I think we can still arrest it. But even in spite of all this, I think when you look at the quality of assets, we need to distinguish between the good companies and the not so good companies. Let's say in the real estate space itself, when I look at our developers, which are the top 10% of developers, there is not, the quality of assets has not deteriorated compared to what many others.
But they're facing some liquidity crunch, which is there, right?
So liquidity crunch is there to some extent. Many of these people have actually been able to also generate sales and also reinvest in the business. If you look at our own book, in the last 1 year, about 19,000 crores of we have been able to collect through payments, through principal as well as interest. In addition to some prepayments have come in, and some of this have been refinanced. So there is, the good developers still have funds which are available.
You're one of the few NBFCs who have taken corrective actions for many of the exposures that you have. 18 such deals where you have taken corrective actions, and I think 14 of them you're proceeding well, and 4 of them is still in the process. What kind of corrective actions are you taking for them?
So one of the things that we believe, that because of our understanding of the real estate space, we can see problems that could come up even 12 and 18 months down the line before what they do come up. And that's when we start taking these corrective actions. So these are still assets which are where the loans are being paid on time, but yet some correction can take place. The way we do it is, sometimes we talk to the developers, we say that we believe that you need to lower rates. Because very often people are stuck on the, okay, I can't lower rates, but sometimes we have to force them to lower rates. Sometimes it could be that we find that certain developers are not being able to either get funding for their projects, or it could be that they are not being able to sell enough. So we've moved projects from one developer to the other as well. So it's several such steps we take. Sometimes we could get a co-lender in as well. So it's a combination of many of these such steps.
The DM model, which development management model, which you spoke about just now, how successful it is? Have NBFCs been able to get the desired result because of that? Because ultimately the demand is what determines whether the model is right?
So that's the question. There is demand for, if you have the right product with the right developer, then there is a demand. And that's what you have to find to match the product. So sometimes we've made product changes. So somebody has a larger, let's say, in today's environment, they've built too many large flats. Can you make those flats smaller? And if a more reputed developer gets in, then there will be sales. So that's what we've been able to do.
You also have been giving some moratoriums on the principal as well on some of the developers, which has come down drastically, I think, from 35% or to 18-19 odd percent. How do you see the developer stress going forward?
See, the moratorium that we've given was always planned. Because you must appreciate that in real estate, it's very difficult for you to say that a project will start throwing cash at a particular date. In the early stages, one needs to have some flexibility. Sometimes it could be because the approvals are not there. Sometimes it could be because the policies change and it takes longer than what you would have thought it. So we've always seen that moratorium in the beginning is not a bad thing to do. more importantly, what you have to do is to see that any cash which comes out from the project is actually trapped in an escrow which we have got access to. And therefore, you find that in those projects which we also had moratorium, we've also got prepayments.
Okay.
And when I spoke about the 19,000 crores that came in, a lot of it is that those who are under moratorium have also prepaid. It's not that they cannot hold back on their cash. And therefore, it's only, as you said, 18% or something is in moratorium.
So it will come down subsequently as...
It does, yes, yes.
Do you see the stress coming down in the sector? As it means, because all this is a factor of the stress also, right?
See, the stress, again, I want to re-emphasize, the stress depends on who the developer is. It's not that there's no demand. There is still demand in the system. It's the right product with the right developer, and there is not as much stress.
And are you seeing, because in the last 1 or 2 years we've seen a focus towards affordable housing, middle income housing, which is there. Many of the developers are now moving from luxury to this category because the ticket size is much lower, and also maybe the demand is coming from there. Do you see much more security in this kind of housing, at least?
So there is definitely a move from the very luxury large size homes to the smaller homes, which are moving fast. So today, if you have a completed project or near completion, and if you have a ticket size of a flat which is sub 3-4 crores, then there's a good demand.
You've been also raising capital through securitization. We saw that happening in the last quarter. Do you have further plans for securitization going forward?
No, it depends on the environment. I think that's a good way. I think we were the first people to do securitization. Exactly. Now many others are following it. It's a good way. It also shows that the quality of assets that we have, they were actually rated by CRISIL as a AA+. So it shows that it's in another verification that our asset quality is good.
But you will be going towards that as well?
So we will look at it. We look at various options too.
One interesting fact which came out from your earnings was that your exposure from raising funds to mutual funds have come down drastically, from 39% to I think 4-5%, which is, if I'm not wrong. What was the reason? It was a conscious effort from your end to reduce that exposure?
So our mutual fund exposure at the end of September 2018 was 18,000 crores. By the end of November, our exposure to mutual funds as far as CPs are concerned from 18,000 will go to nil.
Okay.
It's definite because I find that that's short-term money. And it is like it's like a drug, you get injected with a low cost, and then it has its consequences that we've seen. So we didn't want to do that, and therefore we have actually consciously brought it down.
So where do you reach out for long-term funding? Because housing projects are, long-term funding, and if you take retail, it will be around 20 years payment period which comes in, right? So how will an NBFC, which is very focused on real estate?
First of all, that's why as an NBFC we are not only focused on real estate. Today we are actually diversifying. If you look at our real estate exposure, where residential is where these issues are, it's now gone down to about 48% of our total book. Besides this, we have also focused more on retail, which has gone up now to 13%. We also have other corporate loans. And our emphasis going forward is to actually expand beyond this to consumer lending, to more retail, so that those are the areas where, yes, there may be longer loans, but consumer themselves are not long. It's the retail housing which is long. But you get enough repayments, and there are others facilities available to fund them. So I don't think that's an issue.
My final question, I'm running out of time. Can you give us a quick update on the LODA and the Omkar projects, because your exposure...
Our LODA project, which was about 3,500 crores, I think our exposure will come down to 2,000 crores by the end of March 2020.
There's a slowdown that happened in the...
No, there is not at all. In fact, if I can say, LODA has actually been prepaying us. Even if I look at the numbers which were released by LODA in the last 6 months, their sales have been 3,300 crores, which I think is, if not the highest in the country. So that's one. As far as Omkar is concerned, our exposure to Omkar, first of all, is not in 1973, which is the big
it's Mahalakshmi and Crescent Bay.
So when you talk about Mahalakshmi, when you talk about Crescent Bay, what is the security that we have? It is the cash flows of the project. These are all receivables. Omkar, for instance, has an agreement with L&T in Crescent Bay, where L&T is doing the development, they are doing the sales, and for the services which Omkar had done till now of clearing all the slums and all that, they get a certain percentage of the revenue. That revenue is escrowed with us. So therefore, it is really in some way our exposure to that extent is for L&T to complete the project and to sell it, which is what they have been doing. Similarly, in Mahalakshmi, it's the same thing. Omkar's exposure, we get escrowed from the from the sales revenue that comes out from Mahalakshmi, and therefore it's for Piramal Realty to see that they can develop it in time and sell it.
Mr. Piramal,
so to that extent it's reduced.
Mr. Piramal, thank you very much for joining us on today on,
Thank
and
you.
wish you a very happy Diwali as well.
Thank you. Same to you.